I'm Salvatore Babonis with an Australia's Top Story data dive into Australia's trading relationship with China. You always hear this story about how Australia is so dependent on the Chinese market that Australia can't afford to anger China because all China has to do is pull the plug or close the ports and not take Australian merchandise, and Australia's economy would be devastated. And here are the reasons why. And when you look at a chart like this is from the Department of Foreign Affairs and Trade, from DFAT, showing Australia's top export markets. These are 2018 data, but the picture looks pretty much the same today. And there you see it, $123 billion of exports to China, Australia's number one export market. What's more, that's 30% of total exports. So that sounds like, wow, if something goes wrong with China, 30% of Australia's economy is just devastated. Well, that picture is entirely misguided. First of all, let's remember, Australia is not a trading nation. Australia's exports account for only 20% of GDP, and that's among the lowest in the world. It's really very low. So, first of all, 30% of exports go to China out of 20% of GDP, which means that a total of 6% of Australia's GDP depends on exports to China. Now that's a lot, but it's not enormous. That means that if all Australian exports to China were to stop tomorrow, it would mean a serious recession in Australia. But of course, all exports are not going to stop tomorrow. Imagine if instead, exports to China were to drop by 10%. Well, that would mean something like 0.6% of GDP, and that's bad, but that's not so horrible as it would sound. But wait, there's more. This figure has mushroomed just in the last few years. Go back to 2015, Australia's exports to China were 1/3 less than what they are now. And in fact, if you go back a little further, just 10 years ago, or a little more than 10 years ago, China wasn't even Australia's top export destination. A decade ago, Australia's top export destination was Japan, and Australia's exports to China were much, much smaller. So what we've really seen in the last 10 years is a massive Australian export boom to China. That is something very new, and Australia could go back to the kind of economy, the kind of export economy it had in 2007, 2008, 2009, and it would be no catastrophe for Australia to do so. Just because a few people have gotten very, very rich off massive exports to China doesn't mean that Australia is particularly dependent on China. Let's remember, those exports are highly concentrated in certain sectors. Now, again, we can see this. These are data from the Observatory of Economic Complexity at MIT. And again, look at Australia's trade composition, and what is it? Iron ore, coal, petroleum, copper, crude oil, gold, wheat, raw aluminum, refined copper, aluminum. In other words, Australia exports overwhelmingly commodities. Now, commodities go into a single global market. There's not a Chinese market for coal, there's a global market for coal. And if Australia's coal is serving that Chinese market and China were to close it, China would have to get coal from somewhere else. So if you have a look at the top coal exporters, top coal importers, these are the 10 countries that really determine the global coal market. Well, Australia is the top exporter, just ahead of Indonesia. And who's the top importer? China, just ahead of India. Now, if Australia's coal goes to China and Indonesia's coal goes to India, and then Australia were to have a diplomatic pact with China, and China said, no more Australian coal, what would happen in this market? Well, coal is a commodity. That means that it's fungible. For the most part, a lump of coal is a lump of coal. Yes, there are quality differences. Yes, certain power plants are optimally designed to use some coal, not another. But if anything, that design for Australian coal in a Chinese power plant would help Australia keep that market. But in general, coal is coal, which means it can go anywhere. What that means is that if Australia is blocked from exporting to China, if this path, Australia to China, is suddenly blocked for political reasons, well, China has got to get that coal somewhere. Where is it going to get it? It's going to go to Indonesia. And if Indonesian coal goes to China, well, guess what? Australia's coal has to be diverted to India to serve that market. It's like squeezing on a balloon. You squeeze in one place, it goes open, so it pops out somewhere else. You can't block a commodity market because commodities are undifferentiated. They're fungible. A bit of coal is a bit of coal. If you still don't get your head around that, think of the oil embargoes back in the 1970s when Saudi Arabia and the OPEC members embargoed the United States, wouldn't sell oil to the United States. Well, who had the power in that relationship? The producers of the oil had the power in that relationship, because if they weren't willing to sell their oil, the oil price shot up. But what about a consumer? I mean, could you imagine the United States in the 1970s saying, we don't want Saudi oil and we refuse to take it? Well, if that had happened, some other OPEC member would have sold oil to the United States. That is, the OPEC pricing power was only possible because they had a monopoly on all oil exports. The coal market is nothing like that. I mean, in the coal market, there are 5 big exporters, there are 5 big importers, and if one doesn't take it, the other one is going to. Now, the real problem for Australia's commodity exports is the slowdown in the Chinese economy. These are forecasts from the International Energy Association. And as you see, here's Australia's export boom in a single graph. China in 2000 importing 955 million somethings of coal. I don't know the units in this graph, to be honest. Rising to 2.7 million in 2017. 955, 2752. Well, there's Australia's export boom. Now, China's demand expected in 2023, slightly lower, right? And that's going to happen. In fact, that's already happened. The Chinese economy has stalled. It's been stalled for a couple years. Australia's exports to China are going to stagnate, if not decline, over the next 5 years. And that has nothing to do with politics. That has nothing to do with Chinese spies defecting to Australia, with what the Morrison government does, with what anyone in Australia wants. It has nothing to do with that. It's all about the domestic Chinese economy. Look, China is only going to grow from a poor peasant economy to a highly industrialized economy once. That's already happened. Australia got its export boom. And now that it's had it, these are data from the Australian government, now that it's had that boom, well, the boom's not going to happen again. Australia got its one-time boost from selling more and more and more coal to China, and it's not going to happen again. If Australia really wants to improve its economy over the long term, it's got to change this mix. I mean, these are not the markets of the future, guys. I mean, nothing wrong with exporting iron ore and coal and petroleum and gold and wheat. They're all great products, barley, but these are not things that are going to drive the economy of the 21st century. If Australia really wants to have a 21st century export economy, it's got to get integrated into global value chains. And that doesn't necessarily mean high technology. It could even mean bespoke products like wine, or more particularly agricultural products beyond meat. So if we start looking at cheeses, processed agricultural products, these are all unprocessed agricultural products. But if you start thinking about things like the agricultural technologies that go into making Australian agriculture so productive, and start exporting things like that, well, then you can start making money in the 21st century. But really, Australians, iron ore and coal is not where it's at. That's where it was, and some people in Australia got fantastically wealthy over that, but that's not the future. And no matter how you look at it, no matter what Australia does in its relationship with China, those exports are going to stagnate over the coming years. They are not going to drive Australia's economy forward. And even looking in the past, they may have driven Australia's exports forward, but 94% of Australia's economy is not export driven. So my message to you, Australia, don't worry so much about this, about the 35% of Australia's exports going to China, and think instead about the composition of Australia's exports and what Australia can do for the future. Now, I'm going to put all the links to these various data sources in the description for this video. I hope you enjoyed it. If you'd like to see more of these kind of explainer videos, just put a note in the comments and I'll see what I can do about data dives about Australia in the future for Australia's top story. Thanks for watching.